Welcome back to another insightful episode of Dividend Dive. Today we have a wealth of valuable information lined up for you. Before we begin, let's take a moment to explain what Dividend Dive is all about. This program serves as your guide to the world of high-yielding dividend stocks, where we explore the market to uncover lucrative opportunities that can enhance your investment portfolio and generate a steady stream of income. So, let's dive right in. In this episode, we'll focus our attention on a stock that has been tangled up in the banking sector meltdown, but may be of interest because of its high dividend yield. That stock is Goldman Sachs BDC, ticker symbol GSBD. Now, let's take a moment to explore what the term BDC actually stands for. You may have heard this acronym mentioned in relation to GSBD and other similar companies. So, what exactly does BDC mean? BDC stands for Business Development Company. It's a specialized type of investment company that was created by Congress in 1980 as part of the Investment Company Act. BDCs were designed to provide capital and support to small and mid-sized businesses that may have difficulty accessing traditional sources of financing. The primary purpose of a BDC is to invest in private and often non-publicly traded companies. These companies typically have strong growth potential but may lack the necessary capital or resources to expand. BDCs step in by offering funding, guidance, and expertise to fuel their growth. BDCs operate by raising capital from individual and institutional investors, just like traditional investment companies. They then deploy this capital into a diversified portfolio of investments, consisting of debt and equity positions in various businesses. By investing in a range of companies, BDCs aim to minimize risk and maximize potential returns for their shareholders. It's worth noting that BDCs are required to distribute at least 90% of their taxable income to shareholders in the form of dividends. This distribution requirement makes BDCs an attractive option for income-seeking investors who value consistent cash flow. So, the next time you come across the term BDC, you'll know that it refers to a business development company, an investment vehicle designed to support the growth of small and mid-sized businesses while offering potential income opportunities to investors. Understanding these investment vehicles can provide valuable insights into their unique features and opportunities. Goldman Sachs BDC, ticker symbol GSBD, is one such BDC that has established itself as a reliable investment option. By specializing in financing middle-market companies, GSBD has positioned itself as a key player within the BDC landscape. So as we mentioned, GSBD is a business development company that specializes in providing financing solutions to middle-market companies. It offers investors the potential for both income and capital appreciation. Let's take a closer look at what makes GSBD an intriguing investment option. One of the key highlights of GSBD is its impressive dividend yield. This means that investors can potentially receive significant income from their investment. Additionally, GSBD maintains a diversified portfolio, spreading its investments across various sectors. This diversification helps to mitigate risk and ensure a more stable performance over time. Let's take a closer look at GSBD's dividend yield, a crucial factor for many dividend investors. The dividend yield represents the percentage of the stock's price that is paid out annually in dividends. GSBD boasts an attractive dividend yield, consistently providing investors with a steady income stream. As of the latest data, the dividend yield stands at 13.76%. This means that for every dollar invested in GSBD, investors can expect to receive about 14 cents in annual dividends. That is a lot better than your average United States interest-bearing saving account, where you may only receive a half cent and is you're lucky a whole cent through the year. It's important to note that dividend yields can fluctuate over time, influenced by various factors such as changes in the stock price and the company's dividend payout policy. However, GSBD has shown resilience in maintaining a competitive dividend yield, making it an appealing choice for income-oriented investors. Now, let's shift our focus to the stock price of GSBD. Analyzing the stock price can provide valuable insights into its historical performance and potential future growth. Goldman Sachs BDC Inc.'s price is currently down 12.65% so far this month. During the month of March, the stock price has reached a high of $16.23 and a low of $13.69. Over the last year, Goldman Sachs BDC Inc. has hit prices as high as $20.50 and as low as $13.54. Year to date, the stock is down 27.19%. Remember, stock prices are influenced by a myriad of factors, including market conditions and industry trends, plus investor sentiment. This could be why the stock is currently in a downward trend because of the recent banking meltdowns over the last couple of months, but it can also be affected by company performance. It's important to conduct thorough research and consider multiple indicators when evaluating a stock's price. Additionally, it's worth mentioning that while price analysis can offer insights, investors should focus on the long-term fundamentals of a stock rather than short-term price fluctuations. GSBD's stable dividend yield and diversified portfolio of investments contribute to its overall appeal as an investment opportunity. I hope you're finding this analysis informative so far. If you're enjoying our content and want to stay updated with our future episodes, I encourage you to click that subscribe button and join the Dividend Dive community. By subscribing, you'll gain access to our valuable insights and be part of a community of like-minded investors. That brings us to the end of today's episode of Dividend Dive. We've taken a closer look at GSBD, a stock that offers the potential for stable income and long-term growth. Remember, conducting thorough research and staying informed are essential when making investment decisions. If you found this episode helpful, please consider giving it a thumbs up and sharing it with your fellow investors. Your support allows us to continue producing quality content and helping more individuals navigate the world of dividend stocks. Thank you for joining me today. Until next time, keep exploring, keep learning, and keep diving into the exciting world of dividend investing. Take care, and happy investing!
Hey there, before we end, we want to make sure we're transparent with our listeners, and we want to disclose that the podcaster may own stock in this company. Now we want to make it clear that we're not financial advisors, and this podcast is for educational and entertainment purposes only. We're not making any recommendations to buy or sell any securities. However, we understand the importance of FTC compliance, and we want to let you know that any opinions expressed in this podcast are solely our own and are not influenced by any potential stock ownership. At Dividend Dive, we strive to provide accurate and unbiased information to our listeners. We believe in transparency and integrity, and we want you to have all the information you need to make informed investment decisions. As always, do your own research and consult with a financial advisor before making any investment decisions. Thanks for listening, and let's keep swimming. That's it for today's podcast. Thank you for listening, and be sure to hit that subscribe and notify button. If you have any questions or comments, please leave them in the comment section below. Also, let us know if there is a high-yielding dividend stock you would like us to review. See you next time.